Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable where we talk about current market condition, NVIDIA earnings, Palantir, ARM, JP Morgan, different themes, interest rates, inflation, soft landing, hard landing, and answer any questions you might have. So please, I encourage you to type in your questions to make sure I get to all of them. For those of you who are new, welcome. This is my brief bio. I was thinking about this kind of how Tradespoon is different from other companies. I think the difference is that my background is technology, right? I was a CTO of several publicly traded companies. So I'm very passionate about building technology. And since the company went public, Options Express, in 2006, 2007, I decided to manage my own money. So I built a team of financial engineers that are constantly building new models using artificial intelligence neural networks. And especially in the past couple of years, there is a lot of advances in the neural nets, state machines, generative AI, and the number of libraries and performance continues to improve. So I'm really excited about being in that field. So that's the difference, right? My background is technology, and I've been managing my own money over 20 years, right? So I don't, you can find places where people give you signals, you can find places where people can trade, but combination of both, where people trade and they have their own proprietary technology, that's, I think, is unique. So that's my background. Disclosures are very important, right? There's always a risk associated with trading stocks. Trading is about looking at probability of different outcomes, right? And trading based on those probabilities, right? So it's very statistical analysis, and there's always an element of uncertainty. So if you're new to trading stock or options, I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into the rules, let's talk about market, right? That's kind of what we're here for. This week, it's all about NVIDIA, right? It's all about NVIDIA. It's all about AI stocks, and NVIDIA is continue to go higher, right? It continues to grind higher. After the earnings, it's basically recovered all of the losses going into the earnings and continues to grind higher. So that's pushing across the board, right? Whether it's ARM holding or SMCI, right? Or Palantir. It's pushing the AI stocks higher, and not only AI stocks like Microsoft, right, Meta, continues to grind higher, right, making new highs. Obviously, not all stocks, right? You can still see Apple is below 200-day moving average, and it's been like this for for majority of 2024. It's been trading below 50 and 200, and now it's actually 200. And then Tesla and Google. Tesla similar, below 200-day moving average. Google is at 50-day moving average, but still underperforming, doesn't participate as much. But you do have stocks like JP Morgan, right? So some of the banks continue to grind higher, right, making new all-time highs. Industrials making new all-time highs. So you do have and transportation, right? IYT, I think it's all-time highs. Not all-time highs. I think it's testing all-time highs. Yeah, testing all-time highs. So you definitely have broadening of participation, right? So you do have broadening of participation to transportation, industrials, banks. But it's not all green light, right? So interest-sensitive sectors, like small caps, they're still kind of trading, I would say, almost in the bear market, right? Pretty far away from 2021 highs. But nonetheless, it's still a very strong upward momentum since October and intact. Small caps and actually mid caps are breaking almost at the 2021 high, so doing a catch-up game. So you definitely see broadening of the rally. And the only thing that's kind of, you know, a head scratcher is the interest rate, right? At the same time, you know, since, you know, market continues to grind higher and broadening of the rally, interest rates are also continuing to grind higher, right? And we went from 3.8 to 4.3, facing this overhead resistance, and same thing with the dollar, right? On the fear that inflation is here to stay longer than at least people anticipated in December, right? In December, everybody thought we're going to lower interest rates in March. You fast forward to February, and now most people don't think we're going to have a rate cuts first half, right? So I think the next, you know, now that all the earnings are out of the way and NVIDIA is done, focus is on macroeconomic data, right? Macroeconomic data. Today, nothing really scheduled. We had PMI data. It came in pretty good, right? Within expectations. Services maybe slightly lower. Manufacturing slightly better, right? Still in expansion, so it looks pretty good. And next week, in core PCE, that's kind of, you know, for months of January, I don't think it's going to be a big surprise. So really, we're going into March, right? So I think the next major information is PC, you know, CPI and PPI data. Is it one-off, right? Was the January hotter than expected data is one-off and it's just seasonality and needs to be adjusted, or is this kind of higher for longer theme, right? Where if CPI and PPI comes in hotter than expected, it means inflation is going to stay, you know, stickier, longer. And that means the Fed might not lower interest rates in, you know, June, right? It gets pushed back all the way to the end of the year, right? So those are the two forces that basically driving the market, right? So you can see QQQ for the past 3 weeks, no new signal, right? So it broke the uptrend after NVIDIA earnings. It recovered, right? And but no new signals, right? It's kind of engulfing candlesticks for the week, and basically in the past 3 weeks, it's closing at the same price level. Obviously, semiconductors, new signal, strong rally, new all-time highs after NVIDIA earnings. It has a big percentage. Now NVIDIA is almost, you know, I don't know what the number is, but it's 30–40% of SMH. And then spiders, also strong signal, bullish signal, and value breaking out, right? So value stocks that, you know, your top 1,000 value stocks, banks, industrials, transportation, also breaking out. Very strong signal this week and breaking out. So the question is, what's next? We're at 510. We broke to the 480 level. We're at 510. How far are we going? Right? How far are we going? And in terms of possible distribution of outcomes, good morning, Joseph. How are you? In terms of possibility of possible outcomes, position is very important, right? Going back to game theory, it doesn't really matter what Vlad thinks. It doesn't matter what Bob or John thinks. What matters is what majority of the people, you know, every market participant, what majority of them think, right? If I think, you know, we're going to have recession, but, you know, majority of the people think we're going to have a soft landing, well, it doesn't matter what I think, right? What matters is what majority of people thinks. So the dealer positioning, right? Looking at the strike price, right? Even if you're not an option trader, even if you stock trade, I think you still want to pay attention to positioning, right? You don't need to trade stocks, but you need to understand at which levels how are people positioned, right? How the dealers are positioned and how the people are positioned. So you look at spiders, right? You don't need to worry about, you know, Gamma or Charm or Vanna. I mean, you just need to kind of understand, okay, here's the strike price. Is it loading? Or is it thinking? It's thinking. Right, you basically have to look at how are, on x-axis, right, is the strike price levels, right? So S&P right now is trading at 508. The next spike, the next strike was the high open interest, right? That's all you need to kind of know. And the theory goes that that acts as a magnet, right? It was the put skew that acts as a magnet. Basically, you know, you can get to 520 or 525, but a lot of people basically sell in 520 calls because they don't think we're going to get much further than 520. And on the downside, on the support side, right, so that's the spike that I'm looking for. And then the next one is this. 495, right? 495 and then 490 are the next relatively large support. And then if you look at the April expiration, going further out, April, I mean, same picture. Right? So that's how people are positioning. So let's just review those two possible outcomes and basically say, okay, going into the next, we're already in March, right? Or end of February, one more week in February, and then we're in March, and then next earnings season starts April 15, right? So basically, April 15, you know, are we going to drop? The next level is 490, right? Let's say 490, that's 20 points. So we're going to drop 20 points, right? And reach this level, probably, I mean, close to the breakout level. Or are we going to reach the 520 level? Maybe 10 points. Well, let's do fair, 20 points. So 20 points up, 20 points down, right? 530. I mean, 520 is the magnet. We could get to 530 and then drop to 520. So we'll just do equal distance, right? So one scenario, we're going to 530. The other scenario, we're going to 490. Right, so these exercises are important because you need to figure out how you're positioning, right? Spiders finally broke out of this overhead resistance. It's traded for 3 weeks here. And now on NVIDIA earnings, it's pushing higher. So what is the next move? Is the next move to, you know, another 4% higher, or is the next move possibly 4% lower, right? If you think it's 4% lower, then you're less aggressive on bullish. Plus, you can use that as a stop loss, right? 490, 480, you basically say, listen, as long as we're above 480, I'm bullish, right? It doesn't matter, you know, CPI, PPI, NVIDIA. I'm just bullish as long as we're above 480. Below 480, I'm out. So then 480 is your support level. So you can decide how aggressive you want to be on the market. All right, so scenario number one, we're going up 4%. Scenario number two, we're going down 4%, right? Which event is going to happen first? I mean, we know both events are going to happen, right? Eventually, we will get to 480 and break 480. Eventually, we will get to 530 and break 530. And the question is the timing, right? Which event is going to happen first? So one or two. One, we're going to 530. Two, we're going to 480. You've seen the arguments, right? You've seen the arguments. Earnings are better than expected. AI theme is well and alive. People are training models. They, you know, making decision forecast inferences, right? That's all over the news, and they're being monetized, right, to a certain extent. But you know, whether it's Meta or Google or Microsoft, they're just gobbling up all the semiconductors that have high performance that can be used for these calculations. So that's one side of the argument, right? And then you know, still everyone has jobs, people are still spending. We've seen manufacturing data, services data all above expansion, so no signs of recession. Even leading indicators came in a little bit better than expected. So that's the argument for 530. The argument for 490 is that, you know, if CPI, PPI comes in harder than expected in the next, you know, 2 weeks or 3 weeks, then you know, we need to readjust the S&P evaluations, right, with the higher for longer interest rates. All right, Kevin, remember we're State okay, Kevin, thank you. Genevieve, welcome back. I know the gamma is, but is gamma level defined or this computer? What do they mean when they show on charts? So, question was a little bit on the positioning, right? So this is sensitivity, right? It's a second derivative. So gamma, basically, it's a sensitivity of how the delta will change, right? Delta is how, for $1 move on the stock, how much is the option is going to move, right? That's delta. And then for $1 move in stock, how much, delta is going to move. So gamma is basically sensitivity of delta, right? The change, how option is sensitive to the stock, that's delta, right? So gamma is the second derivative, right? How sensitive the delta is to the move in the stock price, right? And VANA is how sensitive delta is to move in implied volatility. And charm is how sensitive delta in the move in time. So these are second derivatives, right? But they are based on open interest at certain contract price, right? And then you have these calculations of second derivatives, right? I'm not going to get into details. What matters is the most important is looking at the strike price, looking at the open interest, and then relative number, right? Because we've seen it 2 weeks ago, it was 100,000. Now it's 80,000, right? So you do see the number of these puts are going down, right? And I watched before the earnings. Last earnings, it was 80,000. This earnings is 40,000. So that gives me a relative evaluation how people are positioned, right? Are they overly bullish? Are they overly bearish? Are they positioned for any negative surprises? So that's why I think this information is important, right? And actually, we were trading square, right? So let's just go over the, well, first 1 or 2. I don't think we finished it, right? So how many of you say 2? How many of you say 1? Don, 2. What about everyone else? Andre, BJ, Don, Ernest, Genevieve, Cecile is back. Cecile, I miss you. Where were you? Jeffrey, Joseph, Catherine, Kevin, Mark, Martin, Michael, T, Tom, Tim. All right, we have a lot of people. Good. Anyone else? 2? Okay, everybody's 2. Martin, 1. Okay, majority of you said 2. Martin said 1. Not to pick on Martin, but he's right. Every time I say it's 2, it's still 1. So I'm still going to go with 2, right? I'm still going to go with 2, right? NVIDIA did surprise, right? A lot, the reaction to earnings is much better than the last earnings. I thought we're going to actually have a repeat of the last earnings, but we didn't. But I think now that all the earnings are out of the way, right? I think, I don't know how we're going to reconcile this notion of immaculate disinflation, right? That the interest rates are high, and as long as everybody's employed and spending and buying chips and traveling to Ukraine, and not Ukraine, but Italy and England, prices are not going down, right? And if the prices are not going down, potentially it's a kind of a structural inflation similar to 70s and 80s, right? Where unless you keep raising interest rates and cause some kind of recessionary pressures, inflation is not going away, right? So right now, that's not what majority of people thinks. Majority of people think that we are in 95 type of scenario, right? Soft landing in 1995. Fed aggressively raised interest rates going into 95, right? 94, 95. Then they started lowering in 95, 96, and inflation never came back. And we had a soft landing, and market continued to rally all the way into 1999, 2000, internet bubble. It could be the same thing, right? We could have 2004 or 2005, and then only in 2030 we're going to have our AI bubble, and we're going to have to sell off. So it's possible, or we can have a scenario like 70s and 80s where Fed is not going to lower interest rate, and at some point something's going to break. But the most popular popular idea is actually soft landing, and at least for the next couple of years it's higher highs and higher lows. So that's the popular opinion, but we'll see. Short term, I think the fact that yield is not dropping basically means to me that it's all about CPI and PPI data in March. And if that comes harder than expected, then if we break through this level, 430, and go to 450, 475, 5%, you know, it's gonna be a similar scenario that we had in September, October of 2023, right here. August, we broke through this level and markets sold off 10%. So it's kind of similar setup. But if CPI, PPI comes in, you know, trending down, then market is just going to take off and continue to rally. So that's, I think, where it's contingent upon. Plus, you know, in reality, QQQ is not making new signals, right? QQQ is kind of, it's flat, right? It was going up, 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 and now it's flat. So in reality, tech has no new signals. Value is pushing high. There is definitely rotation into the value stocks. So that keeps the rally going, but we'll see in 2 weeks. All right, so in terms of Square, right? So I did Square trade, right? Selling premium, iron condor. But why is positioning important? Why do you want to pay attention even if you're not an option trader? So I sold 90 call, right? I sold 90 call. Actually, in my personal account, I sold 90 and 85 call, right? And 55 put. Collected 22 cents and 20 cents, so 40 cents. On the $80 stock, collected 0.5%, right? So now is the probability of outcomes, right? So if you look at Square, right, if you look, this is a screenshot before the earnings, right? If you look at the Square, look where the positioning is, right? Green color is the March expiration, right? And red and blue is this Friday and next Friday, right? So you can see people are selling, not a lot of VANA, right? A little bit of selling of puts, very little. A little bit more buying calls, right? Buying calls at 75 strike and buying calls at 80 strikes. Pretty well positioned, pretty well hedged as a calendar spread in March, right? So somebody is selling 75 call that expires this Friday, and somebody is, you know, buying call, right? Buying call at 75 strike. But the majority, the pretty significantly more VANA, right? Significantly more gamma, right? At 75 strike and 80 strike, right? So there are two outcomes. If they missed earnings, there is a significant hedging at 55, right? 53. That's kind of where we sold the puts, right? 53, 54. You can see somebody is buying relatively large number of puts at 53. So that's the put I sold. I sold the 90 call because you do have relatively large VANA at 85 strike, right? And actually 90 strike, right? So let's see what happened to Square, right? So this is a screenshot before the earnings, right? And let's just follow through the earnings announcement of Square. So initial, you know, better than expected earnings, right? And it popped and stopped right at the 77.5 strike, right? It's dropped to 75 to 77.5, right? Accidentally, you see a lot of open interest at 75 and 80. What does it mean? Because that's where dealers are positioning, right? If somebody is selling, buying call because they think, you know, it's going to go higher, then the dealer has to take the opposite side, right? So as they're approaching the strikes and dealers are watching the flow, they basically say, well, we need to hedge, right? We need to be delta neutral. So it stopped here, right, throughout the earnings. yesterday, and then today when the market opened, I mean the session or when we start trading in pre-market session, it popped and basically it got all the way to 85, right? Almost to my strike 85, and then right now it's trading to 80, right? So that is the very valuable information, right? Because majority of the open interest stayed at 80, right? So that's the importance of the positioning, right? It's not because Square beat the earnings or they missed the earnings, but this is where people are positioned, and you can think of it as it acts as a magnet, right? It didn't really get to 100. I mean, it could have if it hit like really strong earnings, but you can see it's trading at 80, 85, and that's where majority of the people were positioning, right? So that is a very valuable information. If you're trading options, this helps you with the strike selections. If you're trading stock, you know where support and resistance levels are, and you can make decisions, right, based on those levels. So I thought that was pretty valuable information, good example of Square. And then actually, you know, crazier stocks like Carvana. Not that I would recommend anybody to buy Carvana, but look at Carvana, right? Same thing. So majority, pretty large concentration at 70, right? 70 to 75 range, right? 70 to 75 range. This is where majority of people are positioning. That was before market, before the announcement of the earnings. So if you're doing strike price selection, right, you probably want to select 75 strike, and that's what I selected, right? And I did, and actually, it ran up so much that nobody even, you know, market makers didn't even establish the strike price outside of 75.80. So I had to sell 75 call and 80 call to hedge. So now you look at the Carvana. Well, guess what? They had earnings. It wasn't a great earnings. They are losing money, right? They're just losing less money, but they gave like that the economy is stabilizing and people are buying cars, and you know, and then the animal spirits are alive, right? First, it got to 65, right? It stayed after the earnings. Never pulled back, you know, more than, you know, 5 or 6%, right? Stayed there, then gapped up when the market opened, and you know, it got as high as 75, right? Got as high as 75 when the market opened today, and now it's trading at 71, right? So is that a coincidence, or is that a valuable information? No, I don't think it's a coincidence that it's trading 71, because it's a game theory, right? There are dealers, there are market makers that are providing the liquidity at certain levels, and there are institutions, there are retail traders that are trading at these levels, right? So if you know this information, if you're watching this information, well, you know, you could have bought a stock, right? I bought it, actually, Carvana and Square stock. After, you know, I waited 15 minutes after the earnings announcement, after the press conference, probably no more new information. Then you know that the stock can continue going high. Obviously, there's always a reversal. These are just the probability of outcomes, right? That doesn't mean that, you know, I've seen situation where it goes to 75, then it drops back to 60, right? Because somebody says something negative, or you know, CPI data comes in negative. So you could have larger reversals, but the theory goes that these price levels, where there's an open interest, it acts as a magnet, right? Just like a warfare, right? World War I, you had France, you had Germany on one side, the other side, you build trenches, and you know, you don't move very far, right? Russia, Ukraine, right? They build these trenches and you can't get them out of these trenches, right? This is the same analogy, right? You build trenches, you have dealers on one side, market makers on one side, you have everybody else on the other side, and they're basically fighting for the levels, right? So very important information. I encourage you to look at this information. You can always open up account. We do have a link, actually, Yellow Tunnel Hawk. is where you can get this information, right? And you can actually, it's a broker dealer, right? We have marketing relationship with Trader. I'm actually on their TV, so please support us on Trader. But I'll put the link here, right? So actually have a, we have a broadcast now on their Trader TV, or Yellow Tunnel Hawk. Okay. Genevieve, what is your question? My question was, I think, about one or two. Are we going higher or going lower? Does your chart pattern qualify as a sloping or unbalanced head and shoulders? Kevin, sorry, which stock are we referring to? I'm a little behind my. Big corporation would have to build a huge amount of data centers to train all individual and the language and the process. Use the data through those servers and LLM. Lots of money useless if you ask me. More important to feed starving children. That's what I'm getting. Okay. Genevieve, I agree with politics. I mean, building data center for learning. AI is here and it stays, right? Right now, the biggest benefit is creation of content, videos, blog, and that might, Microsoft, that might not really move the needle, but the next thing is robotics, right? AI, manufacturing, and that, so in theory, it will help in different industries, right? So, but, to train this model, learn on this model, requires a lot of CPU. I know even like the models that we are currently using, right? So for the Tradespoon, so the models that feed, let's say, active trader, right? Every day we provide you with, what the models basically see stocks that will outperform, like AMAT, Citigroup, Merck, right? So to come up with these signals, right, with specific entry and exit points, right? It used to take, a couple hours before, right, to run the models, because the idea was that you have one model and it fits and it works on all the stocks, right? That is not the optimal entry. That's not the optimal. In bigger hedge funds, they have bigger servers, more scientists, data scientists. So they basically say, well, AMAT should be model A, and Citigroup should be model B, and Merck should be model D, based on training, learning, inferences, and how well these performance. Well, that takes a lot of manpower, right, to find this, configure it. And now with the latest advances in AI, we're actually able to be able to decide which group of stocks Merck and Citigroup belongs to. And for the pharmaceutical, it should be pharmaceutical model that works better on pharmaceutical. For the banks, it should be banks model. And today it's bank model A, and tomorrow it could be bank model B. But the point is that the AI makes these decisions, right? These inferences. It takes longer to run, right? So now, it used to take 2 hours. Now it can take 2 days. So I have to buy more servers, right? I have to buy NVIDIA chips to start running these algorithms to support that. And that transformation is not only happening, at Tradespoon, it's financial industry everywhere, right? It's going to be marketing, right? So eventually it will be everywhere, especially with the next wave of robotics, right? So, I'm reading a book by, Elon Musk, right? Isaacson. It's a fascinating book, right? And the way fascinating how he thinks, but that's how he thinks, and a lot of, companies things, right? It's all about automation, where can I remove bottlenecks and make the process go by faster, right? And if I can find investment to the, faster chips and make the process go faster, then I'll do it, right? I don't want to wait 2 days. I want to do it in 1 hour, right? Because over a long period of time, the cost savings will be huge, right? So we've experienced in that, and everybody else is experiencing. So I think that's here to stay. Mark, you should pay attention to volume options. Yes, volume options is important, but more important is open interest, right? Open interest. But Mark, I agree. Is Carvana in short squeeze? I don't think so. Well, not well, at least, well, no. I mean, it's still up 33%. But you can see that it magically got to 75, right, and dropped to 69, right? So is that a coincidence, or is it because, you know, there's not much interest above 75? I mean, you do have this 90, but I guess it's just not enough. It acts as a magnet, so it's pushing the stock from 75 back to 70, right? And it's a magnet, right? So 76, 66, we're in the middle of the range, right? So is it a coincidence, or is it just because people are positioned this way, right? So I think it's because people are positioned this way, right? Gamma squeeze, I think, happens. I mean, it is here, you know, gamma squeeze is kind of bigger moves, right? So like, I think ARM, this is a perfect example of gamma squeeze, right? You know, huge rally, right? Everybody is buying calls, and now for the past 2 weeks, nobody's buying calls, and it actually dropped. It popped on NVIDIA earnings. I don't think NVIDIA is going to save ARM, right? I think it's going back to, you know, 100 or 80, right? Because there's just too much position, too much exuberance, and then when these calls going to start losing value, delta, right? As delta of these calls going to start decreasing, market makers will have to unload the stock and sell the stock, right? And once it already started, kind of NVIDIA postponed this, but I think, you know, it might get to 150. But as I said before, I think the top is set, right? And the path of least resistance is probably lower, and that would be example of a gamma squeeze. Kevin, spiders, sharp head and shoulders. I mean, spiders. I mean. Oh, the inverse head and shoulder. I mean, it does look like, right, kind of a classical double bottom. I would call it double bottom and then breakout. So it's a classical double bottom breakout. The question is that a confirmed breakout or is it not? The more important point that as long as this uptrend is intact, right, you can be a bull or bear, but the only way to trade is higher highs, higher lows. Right. Once we drop below this level, then you can get a little bit more bearish. But that's the pattern. For now, you can just see it's kind of this ascending channel, right? And I mean, you know, so it continues grind above that line. Market dipping down, yeah, looks like market is reversing, right? QQQ, I mean, it's, you know, too fast, too quick, but, you know, I would watch this spiders uptrend, right? QQQ, we did briefly broke through this low, so I would watch the QQQ level 2 uptrend, right? So we briefly broke through it, right? If we break again, and there's probably no more NVIDIA earnings, that's, I think, when the sell-off can accelerate. But until then, you know, probably not. So, I mean, this is an important level, right? You know, if we dip below 420, then the market is in trouble. But as long as we're above 420 and above this trend line, I mean, just, you know, daily price fluctuations. How many more servers will you need, and how much is your electrical bill going up? I mean, incremental. Electrical bill is not going up that much, right? Data centers taking core, because I mean, in theory, I don't even have to get more servers. All I have to do is a swap, get rid of the old, you know, chips and put in new chips. I mean, I do have to buy. In my case, I have to buy new servers, right? But you know, we actually running on AWS. No, we are running on Microsoft Azure. So I just call Azure and just say, listen, I need bigger, faster, you know, servers. So they go in and they just charge me. Instead of paying $100 a month for the server, I'm paying $200 a month for a server, right? So that $100 is, you know, if my predictions are even 10% more accurate, you know, the cost to me is negligible, right? Obviously, if I have 1,000 servers, but it's the same thought process, right? So I still think Maybe right now you don't see a lot of benefits, except maybe Microsoft and Pelletier stocks, right? But eventually it'll be in more and more companies. It's going to take time. It's going to take time to upgrade the infrastructure. It's going to make time to figure out how to charge more, right? In case of Tradespoon, well, I can't really charge more because, you know, people are spending less money now. They're very conscious about the price. And, you know, predictions are predictions, right? You can, I mean, I can say it's better or worse, but, you know, so I cannot charge. I mean, a lot of companies are like Tradespoon, right? Unless somebody sees a huge benefit and, you know, they just because I run better models on the background, that doesn't mean people are going to pay more, right? And that's going to be with a lot of companies unless I can prove it, right? And show it to you that here's my performance before this model, here's my performance after this model, and then I'm going to start charging you, you know, 50% more. Chip, SMCI has dropped hard this morning from open home. Yeah, I mean, SMCI, I mean, they're not making new highs, right? They're not making new highs. And, you know, I mean, for now, sell-off accelerates. That is example of gamma squeeze, right? Kind of double top, right? You know, watch out for 700 level, right? But this is an example of positioning, right? Positioning, because there is this huge demand for buying calls. Dealers had to sell those calls. Dealers have to be delta neutral, right? They were, you know, they're selling call, they're buying stock, right? It drives. Now, in the past 2 weeks, well, all these delta of all these calls are disappearing, right? It's disappearing. So market makers, dealers are in the game of being delta neutral. So what do? They sell the stock, right? They sell the stock, and then, you know, you have that domino effect, and retail investors sell their calls because they lost majority of its value, and just perpetuates, right? Right, so SMCI already below, you know, below the open session yesterday for the NVIDIA. So, I mean, but that's an example of gamma squeeze. All right, it's 10:16. Okay, so I've spent too much time on stuff. Okay, so how do we help at Tradespoon? Models, right? There's two things that I think we do well. One is we have computer servers and know-how of financial engineers that are building models, enhancing models, right? And you can find these models here, right? Active trader, weekly trader, monthly trader, as name implies, you know, you can train data on 1 day, 5 day, 10 day fluctuations. You can train data on 30 days, 60 day, 90 days fluctuations. You can trade data on 1 month, 3 months, 6 months fluctuation. And again, the models now actually decide themselves which is the best model to pick, right? Before I would have to say, well, I'll use model ABC. Now it basically says, Vlad, you have no idea. Let me find out in the library of all the models and that's out there which model works the best, right? So that's exciting. So this is just different time frame, right? Active trader, the idea is anywhere from 1 to 5 days. Weekly traders, you know, 1 to 2 weeks. Monthly trader, 1 to 2 months, right? So these are the models that are being provided. We also use Stock Forecast Toolbox, right? This is a good model that basically shows you support and resistance for any stocks. It basically says 507 stock is overbought, right? 500 is probably where you want to buy, right? But at 507, you want to consider selling. At 500, you want to consider buying for the next 10 days. You know, we can get to 510, right? But, you know, on the downside, we can probably retest 494. Basically matches almost identical to the dealer positioning that we saw on the dealer positioning screen, right? Very well, people positioned at 494 strike, and people are already selling 510 and 520 calls, so we're probably not going to get much further than 510. What else? And then the second is that I'm managing my own money, right? And I share my experience every day in a live trading room. So I encourage you to watch live trading room, morning bell, closing bell. I understand you have sometimes better things to do than listen to Vlad. Then at least watch the recordings, right? Because the information is valuable, right? You can, you know, a lot of companies provide you signals, but there's so many signals. I mean, what do you do with all these signals, right? Well, then you need to watch the recordings, right? I mean, if you're experienced, disciplined trader, you don't need to listen. You know, if I tell you a signal, you know what to do with that signal. But if you're not sure what to do with that signal, or you're not sure how to differentiate between signal 1 versus signal 2, then you need to be in live trading room, right? Because people open up support ticket. I bought, you know, Wells Fargo and I lost money. Well, you know, were you in the live trading room? Did you watch the recording? The answer is no. Well, then, you know, I provide signals. What is a signal? It's a probability of distribution of certain outcomes, but you need to manage them, right? You need to manage probability of these outcomes. And just because you have a signal, that doesn't mean 100% is always going to go in one direction, right? Stocks don't go in one direction. So then you need to be in the live trading room, watch the live trading room, or at least watch the recordings. And you can see today it's a mixture of both stock and option trading. A lot of people say, Vlad, you only do an option trade. No, you only do in stock trading. The answer is I try to do both, because I know we have subscribers that are only comfortable trading stocks, and we have subscribers that are only comfortable trading options. So for that reason, you can see, you know, I trimmed NVO today, I closed Square, Iron Condor, I got out of the TRV trade, you know, Wells Fargo yesterday, EWJ. So you see almost every day there are some trades, right? It's the portfolio management, and I'm rebalancing. Pretty active, I do it on a daily basis. You know, if not comfortable doing every day, we have premium portfolio where I trade option spreads, right? It's one idea a week. Robo investor, it's one stock idea every 2 weeks. So you have different portfolios that you can follow. But I do encourage you to visit, you know, to try Elite Circle, and please, please, please watch the recordings. The recordings are free, right? You don't have to be paid subscribers. So watch the recordings, and hopefully you will see how to be, you know, it will help you to become disciplined and confident trader, right? We also have one-on-one coaching, right? I do believe in one-on-one coaching, so try that out. But if you, I mean, that requires capital. If you're not comfortable spending money on coaching, at least, you know, take advantage of the free education in the event recordings, right? We have strategy roundtable recordings, live trading room recordings, just different topics, you know. Okay. Any questions? $10:21. If there are no questions, then I am done for today. All right. Have a great weekend. Enjoy your time with friends and family. Try Elite Circle. We do have a YouTube channel, so you can click on the YouTube channel. We also have broadcasts every week on Wednesday, live trading room and strategy roundtable. So hopefully you can take advantage of that as well. Thank you very much and have a great day. Ernest, Joseph, Andre, BJ, Don, Genevieve, Cecile, Jeffrey, Joseph, Catherine, Kevin, Mark, Martin, team, thank you and have a great day.